Okay, good morning, everyone. Good morning. What is going on? We've got visual, audio, minimal face, and a little bit of snow. So, how about that? All right. YouTube is where you are. If you're not there, you're on the wrong place. See how that says comments show up in live recording? That's where your comment could be. You could be selected. All right. Why don't we watch some trash and then get going here? See if there's anything good cooking. Okay. Let's see. I don't know why I'm scrolling. I always watch the same two things. This is new. It has Fed in it. Okay. That's exciting.
Folks, the Fed just turned the money printer back on. Every time this happens historically, dollars flew everywhere, assets melted out, and chaos ensued. One of the Fed does is basically screaming,
Too fast. There we go. There we go. How's that?
Tightening. That's confirmed. It's done. It's over. We're now in a new paradigm. But here's what nobody's talking about. You see the very same...
Okay, that's probably enough of that. I'm already pretty satiated. So this is gold. Gold's sort of rolling... I'm not rolling over, but I don't know that you want to buy gold right now, right? I mean, probably not right now. What about the market? So are we going up or are we going down? We appear to have making inside days, right? Looks better than expected for sure. I mean, back here, definitely expecting something like that, but instead, you know, barely did that. Sort of tested that on the 28th. So the 28th is right here. This is basically a misprint, so that's not even real. Just ignore that. Can basically ignore all the misprints, it looks like. So is that going to correct over here? No. So that was pointless. But I definitely did not go to 670 in here, so god damn it. Or excuse me, whatever it is. Okay, so we'll just look at a daily chart, I guess. Should just get in the habit of looking at daily charts because the 24-hour charts are all messed up because of those misprints. So anyway, so what's cooking here? ONDS did go. That was kind of a question yesterday, but man, did not make it easy. So I wouldn't say it went, actually. That was a good one to not get out of. ASTS did go, actually, but didn't make it super easy. So opening range break was not the way to buy that. Well, I guess it just went down, so you could have waited till it got over open, and that's still not easy. Whatever, you don't have to be perfect. I'm just looking at some ideas here. FLNC's up, holding. Oklo, it did turn up. Lemonade is holding. BW looks good. DVLT never went. Looks like it could have had something going on here. Never happened. Kept going down. Bid F is kind of surfing. Ooh. I can't believe I didn't. Did I mention GSAT? I think I did not mention GSAT. That was a real fumble. Generational fumble. Oh boy. That's not good. Yeah, I don't think I mentioned it at all. I'm just looking at the titles over here, which is what you're seeing over here, pretty much. So, dang, that would have been really good to mention. See what that looked like on a 30-day. And did they make it easy? I think so. I think they did, pretty much. Yesterday's low. Dang. It's alright. Visser, slow moving, but definitely holding up. Frog started to go to AEIS in there. MBIS, kind of a rough wick yesterday. Just to confirm, that's what we're talking about. URBN is still viable, probably, because it had this pullback day, so that's definitely something. Risking 77. So URBN is interesting. And then what? What else is interesting? Is NAG interesting? Whoops. It is, but boy, another one. Oh, it's almost like all the stocks do exactly what the market does. Okay. Big pull and then went. Alright, so that it was solid, but needs to consolidate now? I don't know. I don't really want this because it was so weak. FSLR broke down. Dang, the MicroStrategy long is real. Core is going for that breakout. Went for that breakout. Dang, TTI went. Took a few extra days, but it went. LEU still looks interesting. I know I talked about it yesterday. Yeah, I can talk about that one. LEU. See, now I want to wait for like 9:45. Oh, I don't know. We'll see exactly what happens at market open. Food 2, China, it looks sketch. IQV. This is still interesting. Actually, I don't know if I've mentioned this at all. Is this an ETF or is this a biotech? What is this? Somebody tell me what this is. What is IQV? Oh, all caps. We're doing all caps, guys. Oh, God. Stock. It's a stock. What is IQV stock? Okay. They are a stock. Do they have monies? Because if they do, worth buying. If they don't, they're scary. They run money. They have money. Money. Come on, no mention of money. Do they make money or have it? Any mention of money? That's what we're looking for. Money. Oh, they have money. Okay. That one's interesting. So I have LEU on here. I can go back to LEU if I can't find anything else, but I think there's some other stuff. So I'll put LEU down here, right there. And then IQV can go up here. Okay, Urban and IQV. So that's IQV. Talk IQV, similar tickers. And then talk Urban Q3 earnings. I always do 1E. Q3, 1E, Q3. It's like the opposite with your fingers. And then, oh God. Urban Outfitters. So, oh God. Okay. Cool. Ooh, Sweden. All right. So they had some money. 12%. So sales is how much they sold. That's good. Okay. So, 1.5 billion record quarter for Urban Outfitters. And IQV, God damn it. Excuse me. Okay. What did they do? What was their Q3 earnings? Come on. This is such a chore with ChatGPT. It's like just scroll. Revenue's $4 billion. Bookings outpaced billings. Okay. So they do stuff. They do like data analytics for healthcare. It seems like one of those like everything companies, healthcare. Like we'll just do everything. We'll ship around the medicine with like tens of thousands of employees or something. Why are we, what is that what it's called? IQVIA? It is. Okay. All right. There's a few. So yeah. Cool. All right. Comments on YouTube. Let's get cooking here. Questions, tickers. Welcome in. Welcome in, everybody. Sit down in front. Leave room for the people in the back. $1,000 into these two stocks could surpass your full-time job. The first stock is Urban Outfitters. Record sales quarter. Biggest sales they've ever had in a quarter. retail is ripping right now. People seem to be Christmas shopping, holiday shopping, and at a time when everyone thought retail was dead, it turns out the few that have survived are making the best use of that monopoly. There's another company, IQVIA, ticker symbol IQV, that is holding up super well in healthcare. Healthcare has done awesome in the last few weeks, even as the market has chopped around. There was the crypto liquidation. There's Trump and China's dictator president miscommunicating over rare earths. They're meeting in South Korea saying that they're going to not do tariffs or reciprocal tariffs, and then the market sold off the next week. So everything is topsy-turvy in the market reactions, but healthcare and education, two verticals that are always cash cows, holding up. So this company, IQV, it's a giant clinical research support diagnostics, which I guess is like tools and data analytics on how people are doing and how their data is organized. It's basically like everything that healthcare is that's not doctors and employees at the actual hospital, I believe. So they had more bookings than billings, which is another way to say more demand than they actually supplied, billed for. Kind of like how all these data center companies are talking about having big backlogs and they haven't actually, collected the money to build the data centers or gotten the permitting to build the data centers. They're trading at high valuations. I don't know that you want to jump in these data center companies right now. We'll look at a few of them and look at the context of what was driving the market, what is driving the market, AI, GDP, and then look at these opportunities right now that I think, given the market's pulled back and gotten a little choppy, we could break out here, but why not get into stocks that are doing well regardless if we break out? So it's not financial advice, but these ideas look good.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's what we got going on for Urban Outfitters. Q3 revenues, basically 12% growth year over year to $1.5 billion. There's a record growth. And they had all-time highs for earnings per share and net income. So earnings per share being at an all-time high, I mean, it makes sense unless they bought back a bunch of shares, then their earnings per share would be, or no, I guess if they diluted a bunch, if there were more shares, the earnings per share would go down. Otherwise, you would expect all these things to go up at the same time, right? So, but if we look at this, they're not diluting. They're not increasing the supply of shares, which is good for a shareholder. You don't want a bunch of supply entering the market. They're a $5 billion company. They're in all of these different, excuse me for saying tier one countries where people have the most money that we use to buy stuff. And it's Urban Outfitters. Like, it's a real brand. And they had growth across both, it sounds like, their website and their physical stores. So earnings up as well as sales. So, more profit, more revenue. It sounds good. And they've got some hard-hitting brands. I mean, Anthropology. I don't know about Free People, but I'm sure if you know, you know. And they're trying some software as a service stuff. Obviously, that doesn't really fit with a retailer, but they're trying. So we'll see if that becomes a brand name. Newly. Their growth is across a lot of different places in the world and also online and offline. So fewer markdowns, cost controls. I don't know how they're controlling the costs, but we don't have to look into that too much. And it all seems rosy. I mean, I know we're not supposed to invest in retail, but they seem to be really good at, getting people back in the store with coupons or deals or whatever it is. And we don't really have to worry too much about exactly why this company is doing so well. But we do know that retail is doing well sort of across the board. And we can see that if we look at some of these stocks. Here's Urban Outfitters, URBN. Pretty solid earnings reaction for sure, and it held. So if we look in here, this is that first day, 77.4, where it closed out here. So that's up here. Next day, pulled back a little bit. That's fine. And then once it got over here, it just kept going. And, it would be great to get in immediately right after it shows that it's worth more than 77.4, which is, what everyone decided. And by everyone, I mean, this is a lot of people. This is all of these people. I'll just show you. I'll just get rid of this for a second so you see what I'm pointing at. All these people decided it was worth that. And then even more people stepped in on that 77.4 day right here. So that's like 3 times the normal amount of people who are transacting. And these people matter too. These are like funds. These are, it's probably, I don't know exactly where to see that information or check that, but there may be fewer, individual entities transacting on this day than these days, but the amount they transact is much, 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 much higher. But we don't have to dive into exactly why this works. I guess I'm just pointing out that the reason I'm looking at charts, and I know everyone hates looking at someone else's chart, you might not use this software, but the reason is it actually does tell us what is happening supply and demand wise. Otherwise, why would we look at this, right? We would just look at, I don't know, just the 10Ks and the Edgar database and the SEC filings. So you can risk 30 cents and make $3. So that's the play. I mean, $3 might not sound a lot, but if we zoom out a little bit, we're right near all-time highs. $3 is over all-time highs. Even if it fails, that's a pretty sweet move. I mean, this is a crazy jump up, but look, they had a crazy jump up here as well. And if we look at some other companies, Kohl's pulling back a little bit yesterday as the market stayed up. So maybe hold off on that one. For that one, that first earnings day was here. And we see that here, 22.4. So it's kind of a gift if you do buy it off of here. But it would be great to have it level off and not just slice right through that. I'm not even saying that Kohl's is interesting to buy, but it's in the same sector. It did pretty well. It's not a bad idea. I think I may have actually mentioned it within the past week. Maybe not directly as one of these ideas. Typically in these videos, I've been giving 2 ideas per video and 3 videos a day, so 6 ideas. So there's a lot of ideas, but you know what? I think it helps to not just have like, this is the one stock that is going to save your life, right? So American Eagle is definitely in the conversation as well. Abercrombie and Fitch. This is the one that had, I think or was it Abercrombie and Fitch that had the brand campaign with the influencer? Someone can let me know in the comments. But American Eagle right now, it's just sort of marching up. I don't know. This is the third. It was marching up and then it had earnings. Sorry if this is just this gap is just weird because it looks weird to me because it had a day where it went sideways. Just ignore me. The earnings are solid here as well. Okay. Abercrombie and Fitch, same deal. I mean, these things have just rocketed up. So everything looks good in this sector. I'm going with Urban Outfitters because of where it's at right now, because of this all-time high. But if the others look better to you, then, you do you. It's just got to feel out what you're looking for. And then, kind of on the other side of the spectrum, and by the way, there is like a retail or consumer discretionary that I think is going up as well. I think this is what retail is, right? Consumer discretionary, maybe. IQV is in healthcare. I would have to say this has got to be XLV. So could XLV break out? It could. Is it smart to do technical analysis on ETF? Only if you think a lot of other people are, including big funds. I mean, these funds like Tom Lee's Fund Strat or Kathy Wood's ARC, like they do have technical, whatever they call them, technical associate or whatever, the actual, or they call them a trader. Sometimes they call them trader and they just actually buy the thing instead of making the decisions, which is a little bit of a, rough title for not actually doing anything. But the point is, if they are looking at ETFs, maybe XLV is in a favorable spot to break out, which does matter because if we're looking at individual stocks, that'll help the individual stocks. But anyway, IQV, regardless of that, has a couple spots here where it tested and now it came down a little bit nicely, which allows us an opportunity to get in there. So that's pretty interesting. Maybe sort of tested it here and here, here and here, sort of here. But all you really need to look at within the past 6 months is just this, I think. So risk a few dollars to make 30. Something like that, you could even have a tighter risk and just look for a move up to 240 or something like that. But there's definitely room up here once it gets above 260. But this is probably kind of unsustainable. It's probably going to level off a little. Anyway, it moves 2% a day. It's not like you're holding your life in your hands with this one. I think it's super interesting technically. And then as for, what they do, they do everything that's not the people in the hospital and the doctors, I think, which are also people in the hospital. So this is all the support patient engagement strategy, like there's a lot of people that just sit in rooms and talk to each other. They don't ever touch a patient, right? So that along with tools, and then they talk. So they do they contract other people to do the work and stuff. So that's IQV, and they have money. So you're not worried about jumping in here and then getting hit with some sort of weird trial data or FDA decision that makes it gap down like 40%. So I think it's interesting for that reason. They have this backlog of 30 billion. So that's what I'm talking about that makes it seem sort of like that data center phenomenon. 2 billion of new bookings is still a lot, even if they don't get to that backlog. And none of these are super spicy industries, R&D solutions, analytics, contract sales. But you know what? Their main industries are not going away. I don't think the Trump administration is going to cut health data. I mean, it's just so like boring and obscure. It's not like they're talking about a bunch of controversial like healthcare for all stuff, and I don't see any major risk factors. And if you look at a similar company, MEDP, that company is also holding up pretty well. I think it had a little breakdown after a fake breakout, but but it was holding up. It would be great if it held up for IQV's sake, but even as this has gone down 6 days in a row, IQV has gone up and then come down a little. So I'm not sure they're totally related. I guess if this thing tanks like back to below earnings, then maybe you want to keep an eye on your IQV position. But otherwise, I wouldn't worry about it too much. So the connection. Those are two ideas. Urban Outfitters, URBN, IQVIA, ticker symbol IQV. If you like ideas like those or like the ones on this channel, hit that like button. The YouTube algorithm sees it and shoots this video around. If you want a free course on how to buy stocks before they go up, hit that subscribe. I'll post that in the YouTube posts for subscribers. And if you want the best idea at the time of the market open, head over to stockscommunity.com and you can see some testimonials. See if you want to jump in that Discord for 7 days for $25. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
That was fun, right? Healthcare and retail. How about that?
Same day they ended the QT, the Fed injected $13.5 billion into the banking system through overnight repo operations. That's the second largest liquidity injection since COVID. And that is small chickens compared to what the Fed has signaled is going to come in the coming months. And if you're not paying attention to what this means for your portfolio, I'm sorry, you're going to be left behind. And so in today's video, we're going to break down exactly what the Fed turning the money printer on means, what it's going to do to the economy, what assets are going to benefit the most, how to protect.
Okay. That's a lot. So, what else is going on here that we can take a look at? China. I don't know if China's super exciting right now. I'll get that chat back up here in case you guys... Oh, you know what? I bet this thumbnail never worked. We'll update the thumbnail to make sure that's going right now. At least I remembered part of the way through the video, right? Okay, so Baidu is hanging in there. Unity is pretty interesting. Maybe you want that to chill for a second. Twilio, slow moving, but definitely there. Yeah, Twilio is interesting. And then Nail Home Builder started to go. LEN, Toll. I don't know why I looked at all of them. They all do the same thing. Talent Energy actually sold off. Interesting. DVN is still holding impressively. Iron starting to hold a little. INDV. Wayfair got crushed. So much for retail. The earnings came out way before the other retail still. MPC, I think, is some sort of oil thing. CRNX, some strength in pharmaceuticals. PPTA, metals, and TRA leveling off. VKTX holding up here. TEM holding in there. Biotech holding in there. Barrick pulling back a little. Sunrun Solar pulling back. Gold pulling back. Halo got crushed. Biotechs are scary. This Argentinian thing looking like it could have some strength. This is interesting along with Twilio. Twilio and SUPV. Okay. Let's take a look at those. This Argentina company. What the heck, dude? Melly's the e-commerce company. Okay. Yeah, these are interesting. And Twilio. Let's look at this one. Over $1 billion of revenue, up 15% year over year. And then SupV. $180 million. The SupV operates at a loss, but banking services in Argentina. Okay. Twilio is over $1 billion, 15%. Revenue from voice AI customers jumped 60% year over year. That's pretty impressive. Okay. Okay. Cool. This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 6th. The company is Twilio, ticker symbol TWLO. This ticker does AI, and voice AI specifically grew 60% year over year. This company is long known as like an automation software for phones. So if you have a small business to a medium business to any size business, really, you can set up your call-in number, your 1-800 number, whatever it is, in Twilio, and then you can route based on when people come in where that phone call goes, or if it triggers an email or an SMS or anything like that. So that's all great. That's what they've been doing for the past couple of decades. But now voice AI is so good that you've probably experienced this or something like this, where you get a call or you call someone up and then you get redirected or whatever, maybe by Twilio. You get a voice sometimes on the other end of the phone that sounds so good, it doesn't sound like a real person. Real people are imperfect, right? So, and for that reason, companies love it. Employees don't show up, they're grouchy or whatever. Now, Twilio does have an advantage of having so many existing customers. So they might be able to acquire the best voice AI solution, whether that's 11 Labs out of Europe, backed by Andreessen Horowitz, or some type of smaller, public company that has maybe more enterprise customers, but not as much technical prowess, like SoundHound, ticker symbol SOUN. The point is that 60% year over year revenue growth is a big deal. And they have over $1 billion in revenue, up 15% year over year. Seems like an interesting stock to buy. It's very early for Twilio. There's another stock on the whole other side of the hemisphere, and This ticker is SUPV. SUPV is what I'll call it, but you probably ought to speak Spanish to totally say it how it ought to be said. They are in Argentina, and they have a holding company of a bunch of regional banks, financial services, lending, of course. Argentina recently had an election, and Javier Milei was elected, so that was basically a big boost for all the Argentina stocks, including MELI, Mercado Libre, the Argentinian e-commerce, the Amazon of South America. They're not only in Argentina, they're in a lot of other countries down below the equator. This is a massive, big opportunity to be the next Amazon, the next JP Morgan Chase. I don't know if SUPV would be classified as the next JP Morgan, but the ticker just had earnings. The company seems to be holding up after that earnings. So it's an interesting opportunity to jump into this Argentinian stock given the macro environment. Let's jump into a little breakdown on the charts and what these companies are up to.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So, real quick, this is what's going on here. Deregulation is the word that people always like to use when the quote-unquote Republican candidate gets elected, libertarian, whatever. Markets go up. Entrepreneurs basically push all of their projects to the front of the line to try to get them going. Now, Twilio, this is a little bit more of a technical wave. 60% year-over-year growth revenue from AI voice customers. So it's not just someone, at the top of I don't even know if Time Warner is still a company, but you get what I'm talking about. These massive enterprises, Chase, JP Morgan, are actually big consumers, I believe, of voice AI. Think about all the customer service they have to do. Any massive company who has a bunch of people answering the phone at some point is going to use something like Twilio. And they're not just saying, hey, try out some AI stuff because we keep reading these McKinsey reports. Bain keeps telling us that if we don't do AI, we're going to get ruined in the same way that these consulting companies like Accenture got ruined. All their people who were consultants are not needed because we can just use an LLM. This is a little different. This is more like not a nice to have tchotchke type of AI procurement. This is more like if you use voice AI, and this is pretty rough to say, but you can basically lay off tens of thousands of people within the next few years. And that's what they're doing. They're buying the product. So I don't know what to say except to say you can invest in the company that appears to be benefiting from that. So that's Twilio. And this is that revenue reaction. And then the bounce. So the bounce is important. There have been reactions that do not bounce. I think Oracle comes to mind as maybe the worst example of that, where the price of the stock now is actually below it was before the OpenAI deal. So that OpenAI deal has had big moves in stocks like Broadcom. Even Walmart had a pop that continued after earnings. There's a lot more. Nvidia had a pop, kind of sold off after earnings, after that fake breakout. Nvidia was already up a lot though, so if this digests for 6 months, I don't think anyone is going to be completely dead on the company, but Twilio has a solid earnings reaction once you take into account some of those others' reactions. So it's not something as good as, even Caterpillar pulled back and went. This is kind of a picture of Twilio actually. The bull case is it does something like this. Goes off of a left side peak. Twilio's kind of doing that here. It tested that right here. So right now, this is kind of not the most beautiful flag, because it failed here. But you do get an opportunity to jump in here. If you do set a stop, which you can do that on basically any broker, any software, risk $1 or $2. That's a pretty reasonable spot to risk. Maybe 2 days ago's low or yesterday's low. And look for $10, $20 to the upside, which is super reasonable. Doesn't even get you to that all-time high. Well, 151 is the 52-week high anyway. So that's the opportunity in Twilio. And if we look at SUPV, this one looks a little different. It's holding up. I'm going to have to check when the election was, but I think somewhere in here, all this volume is the election. That sounds about right. So it's cooled off a little bit and then had earnings and held up notably. So that's pretty exciting. If we look at Mercado Libre, this one looks a little worse, right? Had that election jump and then earnings did not help the company. Looks like the earnings per share missed. I don't know about guidance and sales, but it's down a bunch. Sales is revenue. And then it's had a little bounce. So there's definitely been some strength in the past couple weeks for all these Argentina companies. So that coincided well with this earnings. So, maybe these earnings aren't great, but they're good enough where it's definitely not causing the stock to sell off. So that's good. And as far as levels, there are these moving averages all sort of crossed is a pretty good spot. So risking $1 to make 10 is great. If you're super, on the ball, maybe you just want to risk, depending on where it opens today or tomorrow, if you can risk this high at 1190, that would be great too, to risk 25 cents or something like that. And then you only need a move of a few dollars to basically make that investment, short-term, mid-term investment, worth it. So I know everyone likes to talk about, massive macro tailwinds and all that. Invest in wide-ranging changes for a country, for their debt, for their currency. But like I just showed you, there was a boost based off of that, but then there was a sell-off as well. And then the sell-off's severities depend on the earnings reactions, where Mercado Libre has a worse earnings reaction. So it is kind of useful to look into the details a little bit for individual companies and not just bet on a whole country and then pick a random stock or company within that country to buy. Because if you did that, you might buy Melly, say, oh, it's like the Amazon of Argentina, let's just buy that one. You buy it right after that election move, which is actually over here, right here. And then you're down, it's not a lot, but you're down 5% for basically what is an avoidable loss. So in my opinion, it's better to jump in with a really tight risk and then look for a really big move up. And there are some notable examples where that has been very much a good idea. These are some stocks I have on the watch list right now, but basically every stock in September went up, right? So, and I'm not saying that oh, well, just buy the market because the market goes up. It's like, no, the whole point is the market goes up 5%, right? And then if you pick a stock that's at a favorable spot, you can get a move of more like 80%. So it is a big difference. It's worth it buying individual stocks. You just don't want to jump in and basically not have a risk level at all. So it's okay to take a lot of losses. So this is the idea on that macro Argentina move. People tend to just tune out when I talk about emerging markets, I've noticed. I can see the analytics. So for that reason, I think I'll just take a look at basically what's moving the most right now to give you a little pick of, hey, I think these stocks are great. I think Twilio's great. I think SUPV, this is the company, by the way. If you speak Spanish, maybe you'll tell me what this is. Grupo Superviel SA. It's out of Argentina, whatever. These are companies you might be considering. And Nebius is still interesting. It's just slowly moving up. SanDisk, that long never really materialized. I think shorts are pretty happy they didn't get squeezed. I definitely would not long it right now. These are, by the way, sorted by the fastest, basically daily range over the past year. So what that means is right now they might not be moving a lot, but if you look over the past year, they do move quite a lot. And I mean, 600%, right? So some of them could come down to earth, but they also could have moves back up, which is exciting. So QXO right now, probably you don't want. Seems extended. BBAI, and these are just the top, 5 or so fastest moving or most often moving over the past year that are over $1 billion market cap. So that's actually really important if you're looking for stocks to have filters that don't just overwhelm you. This was supposed to be, or maybe still supposed to be, the next Palantir. BBAI is somewhat interesting, but not holding up incredibly well right now. And CLSK could actually become interesting. This is a Bitcoin miner turned, I believe they're probably getting into the data centers like all the other Bitcoin miners at this point. And this earnings reaction looks pretty solid, actually. So even though initially I think there was some worry about that one. So the ideas are Twilio, TWLO, and SUPV, the Argentina ticker. If you like these ideas, hit that like button. It helps the YouTube algorithm show it to other people like you. And if you want a free course on how to buy stocks before they go up, hit that subscribe. If you want to see these ideas in real time, head over to stockscommunity.com, and there's a 7-day trial. So see if that's for you. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay. Cool.
Yourself and overall the strategies that you should employ right now, how the billionaires and smart money are positioning to make sure they come out on top, and how you can copy them. I'm going to present all the data, the evidence, so you don't have to take my word for it, but hear out my arguments and be your own judge. And then we're going to go on to our sponsored segment today, and that's on Aduro Clean Technologies, ADUR, on the NASDAQ. They're developing a chemical technology that aims to address one of the biggest environmental and economic problems of our generation. I'm talking about the plastic waste crisis. But this company isn't just about being green. This is about turning waste into actual value, and that's where it gets quite interesting. I'll present the company and why you may want to take a look at it.
Kind of looks
always,
like
if you're the one
iron.
taking the ultimate risk, make sure that you're the one doing
But
the
it's
ultimate
not a
risk.
lot of
Always do
volume
your own
here.
due diligence on all ideas presented. Okay, folks, so we need to start with one of my oversimplified analogies. Okay, so let's say there's a small, remote, isolated island with a
Okay. Let's back up a little bit here. What else have we got cooking here? Get rid of Urban Outfitters. Get rid of IQV. Twilio. SupV is up here. IMAX, that sold off. What about Warner Brothers? That's still grinding up. Pretty incredible. Speaking of grinding up, what about App 11? Wow. This is a big move, guys. This is 20% after that sell-off. IONS holding up there. Galaxy. Yeah, I don't want that. That's a higher low. Crypto seems like dangerous right now. But I guess ILMN. I don't know about that healthcare thing. MedP already sold off. We talked about that. We can just get rid of this MedP right now. GMed. Wow. AUPH sold off. Weren't we just looking at one up here that just got crushed? That's some reason I kept. I don't know why I'm keeping them. Yeah, this is the one. Oh yeah, and IMAX. Let's get rid of those that sold off. Gold. I don't think we want that right now. Don't really want these biotechs. Form app we just talked about. CMI kept going. FedEx is definitely slow moving, but it's at a spot right now. It's not totally uninteresting. I don't know if Skyrocket is totally possible, but CMC is already up. This is just a weird move. STLD, new HL. TMDX selling off. Okay. I hate to say it, but FedEx and LEU are sort of looking the most interesting, unless anything else pops out here besides these retail names. Caterpillar looking good right now. If you're not in Caterpillar yet, now is probably the moment to get in. How's that for an endorsement? Rivian, that's probably going to sell off. WWD is pulling back. Intel is going to pull back. KLAC is interesting. Too much strength in the airlines. And TMC maybe pulls back a little bit. Amgen looks interesting for sure. But biotechs are sketch. What about a little bit of a speed round, guys, through all these companies? More biotechs. That could go. EQT. It's pretty slow, but it's also in oil. This GEV's holding up for sure. Yeah, GEV. We got to get rid of FedEx. I mean, come on. Come on. Zephyr is holding in there. Whoops. We're too zoomed out here. Comstock. AMD is flat. GFI. It's boring. Talked about American Eagle. TDW is at an important spot. And SEI is at an important spot. Now, what about these top movers up here? TEM, so we don't have to be this zoomed in. If you do have any comments, chats. Oh, someone had a chat here. What about DocU and Crowd? So DocU, do they just have earnings? Is that, oh, they're well, you can't buy it before earnings. And then CrowdStrike, this one already had earnings, right? Okay, so this one you could buy over this level. CrowdStrike, you want to look at Zscaler, which looks horrible still, and Rubrik. So if Rubrik earnings are good, maybe you pick the best looking one, which is Crowd. That's what I think is the best move. So if you want to buy it, don't buy your full position today, because that Rubrik earnings could crush Crowd probably. Does that make sense? And then what else have we got cooking here? Oscar, that's the Thrive Capital, Josh Kushner company, right? IONQ holding in there. We don't want any Bitcoin stuff. INSP already went. Rigetti's Quantum, I don't want to get that on the bounce, even if it bounces. A-Lab got crushed. ARM is starting to do something interesting, actually. Don't love bounces, but it's hard to not like this. So yeah, in the meantime, Caterpillar and what was the other one we just looked at? GEV. They're so slow, but we could just pack a bunch of ideas into this video. ASTS went. It went. Yeah, we'll stick with Caterpillar and GV right now. So that's where we're at, and then we can talk about some other ideas as well. They have that power gen growing segment, and then GV Q3 earnings also in the power gen. I shouldn't even talk about emerging companies. Nobody cares. That's what I've found via views. Even though JMAI did actually go. Oh, you want Doc N, not DocuSign? Yeah, that one looks better. It's not the most liquid, but it's definitely liquid enough. Left side peak here. This is interesting. Are they doing something that's hot right now, or at least do they got something going on? Do they have earnings per share? Oh yeah, DigitalOcean. So these guys are in cloud DevOps. That could be something. A little bit of a higher low here. It's just very liquid. Well, it's not, but I mean, you tell me. The problem is anyone who wants to put in more than a couple $100,000 into this is going to be like a little bit sweating in case they move the stock. And you want those people, I mean, it's just kind of chop, right? You want those people because they make the stock super smooth. I mean, this is the most crazy example of smoothness, but All right. Cool questions, though. And you know what? Maybe that thing will just go smooth to the moon. I don't know. Caterpillar had 17 billion. Energy and transportation sales rose. Power generation up 30%. That's the big one. And then GEV backlog orders jumped 50% for GEV. These are both power turbine stocks. So that's what we've got going on here. Whoops. Sorry, I'm just clicking random buttons. You can't see what I'm doing, but just trust that it's nothing productive. That's for sure. There is one stock that is about to skyrocket. The company is Caterpillar, ticker symbol CAT. They have a 30% growth in their power generator segment. So the Caterpillar of today is not the Caterpillar that your kids like with the toy trucks and the real trucks that are probably the leader in that segment by far. Notably, AI and data center buildouts require a lot of power generation and turbines, and Caterpillar actually makes those, not just components. I think they make the full assemblies. And you might have seen that actually, just the Caterpillar logo on the side of one of these, maybe on the side of some type of industrial building. They do have over $1 billion in revenue. This stock looks great. They just had earnings and they're holding up. They're about to, it looks like, break out over that initial earnings reaction. Might come back a little bit, but we'll look into the chart, which is, of course, buyers and sellers, supply demand. There's another company in power generation, GEV, that's GE, General Electric, Vernova. I think there might be a spinoff from GE, or, well, they're not GE, so they are a spinoff. I don't know how the ownership is exactly split up, but this company has a backlog in the billions for power generators. And the big growth for GEV is also in data center buildouts. So these are not all in bets on data centers, like trying to get shares in OpenAI or anything like that. Anthropic, rumored to go public next year, means that there's going to be more eyes on AI and the vertical, the supporting companies. These are definitely supporting the literal powering the compute. So CAT and GEV look poised to skyrocket. This is not financial advice, but let's take a look at these charts right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's what we've got for power. This is actually for GEV. Good order volume and revenue, gas, turbines, and services. Caterpillar as well. Strength from power, generator. Sales jumped 31%. So if we look at what this company is, sure, they might be classified as farm machinery, heavy construction, but they make diesel and natural gas engines, industrial turbines, and they're a lot more than just a big, Tonka truck or whatever. I don't think Tonka is a brand of Caterpillar, but Caterpillar does energy and transportation. I don't know what their financial products segment is, but constructing data centers and powering data centers is part of that growth. This other company, GEV, there's a strong demand in electrification and grid, contributing to that order backlog as well. So I think that means not only the data center, but also the equipment connecting, say, natural gas. If you have a pipeline of natural gas near a data center and you want to redirect some of that, obviously you contract that, but this company can help generate power with that. There literally is a company that does just that. I think Bloom Energy is involved in that company that went up 200% this year, spinning up data centers like Colossus, the X data center, in a matter of months. Not a lot of growth in wind and renewables, but don't have to worry about that right now when they have this $450 million profit this year, and that power and grid equipment demand is so high. So we'll jump into these in detail, but let's look at the charts first. This is Caterpillar, and I did talk about this recently, to be exact. On the 25th, I actually talked about it, which is here. So pretty beautiful moment. If you were able to take advantage of that, you're up a little bit. You do have to be a little bit careful. It might not break straight through that initial earnings reaction. The market does look to be, gapping up this morning, but it hasn't gone yet. So we have to see what actually happens here before we get over our skis here. And then as far as GEV, this company has a higher low as well after earnings reaction was so. And on a more serious, longer term view, this is a long base. This is 3-4 months at this point. And it might seem a little bit like, yeah, well, it's sloping down. It's like, well, it just went 175% up, and you don't expect it to slope down a little. I mean, the fact that it's holding up so well above, say, the first time it leveled off is pretty incredible. And as far as an entry, you want to find whatever entry you're actually going to use. So if you buy it here and you risk maybe pre-market, which is the $600 level, that would be pretty reasonable. It goes back to the high a couple of days ago. It makes the most sense. If it does pull back more, maybe it bounces off some of these highs over here, but you probably don't want some sort of line in the middle that doesn't really correspond to anything. And then for Caterpillar, if I haven't mentioned it yet, which I haven't really, an entry is, besides now, through 600, is maybe this pre-market high of 587. If the bust right through that, then down here at 580 is interesting. This high and this high. If the market pulls everything down, maybe you can look for a long off of there. So those are two different spots to get involved in these two different stocks. And as far as the whole reason to buy Caterpillar, it's just the data center build out story. And I've talked about it a lot. I don't think I really need to talk about it too much. But this is kind of the interesting thing. It was sort of a business that it sounds like customers asked for it, and then they built some generators or contracted another company, or white labeled some generators, whatever you want to call it. But it seems like they actually know how to build them, because now it's a huge part of their business. And then as far as GEV, I think this actually has always been their main business. I mean, they were a spin-off, but Vernova, it's actually in the renewables category. So power, wind, and electrification. and the electrification provides grid solutions, power conversion. So you can't really sell power, wind and solar, without actually connecting it to the grid. So it sounds like they know how to do that. This is obviously not like a engineering channel or anything super in the weeds like that. What we're trying to do is take a look at the fastest moving stocks over the past year. That's what I've got going on over here. And then looking through them to see what's an interesting buy. And I talked about ASTS yesterday. It did go, but it had a little bit of a pullback. So the market pulled back as well. But it is wise to wait, until maybe 9:45 to jump into stocks rather than just jumping in the pre-market. HUT, pulling back a little bit. This could be a buying opportunity, but anything that is all related to Bitcoin, I'm not really gung-ho about yet. Oklo, this nuclear stock, is starting to turn off, the Sam Altman stock. Affirm, Upstart. I mean, I guess you could make the argument that buy now, pay later. This looks okay, actually. Could have a boost for the holiday season, but it's kind of a weak argument when the stock doesn't look great. I don't even know what this is, but this is a nice boost. It's nice to know what a company is before you get excited about them. We can look at that. This is pretty much the decision-making criteria to find stocks like Caterpillar and GEV. You have to compare them to these little companies, a semiconductor company in a lot of different countries. Materials. Semis are doing, I think, okay. I'm blanking on what the semiconductor ETF is right now. But Soxel is definitely one of them. Oh, SMH is the one I was thinking of. It's been strong recently. We've seen KLAC looks like one of the strongest semi names off of this peak year. That's definitely of interest as well. There's a lot of stocks that are of interest right now, but none of them are of interest for, a month or two long hold. Most of them seem like quick, 1 to 3 day buys or 1 month buys. It's Quantum Name turning up, but I mean, it's a lot. It's up 10%, but you really want to hold this now that it's already up. QS, this battery name, is forming a higher low as well, along with AMPX, another battery name holding in there. Rocket Lab, so a lot of these speculation names that went up like crazy and came back are looking like they're starting to turn up. Cleveland Cliffs slowly moving. Vertical Aircraft Takeoff Company holding in there. ONTO, that's already up. Open Door doesn't look super hot, even though it does have a higher low after these earnings. And VST, which is similar to GEV broadly, I think there's probably some notable differences that explain this sell-off. VST does not look, what did I just type? Oh, I typed GEV even though I was talking about VST. VST does not look as attractive as some of these other power generations. This is retail electricity. So this is a little bit different. This is more in the next era energy category. They are constructing this battery storage project, but it's on a crazy run. It definitely deserves to pull back. It's just, you can see when it does pull back, those pullbacks are pretty vicious. So would probably leave that alone right now. That next era energy, though, is still looking pretty awesome. So it's not totally the sector. It's more like how this stock moves. Iron, the Google connection is there, but a little weak movement there. LEU uranium turning up fine. If it can break out of this sort of randomly drawn line that you sort of see what's going on. If it can go, whoop, that's, ridiculous, but definitely possible. Lumen, ridiculous move up recently. And then ON is this on running. It's a semiconductor company. I think it'll tell us, right? Yeah, it's a semiconductor company. Semis have been doing well. Reddit looks good as well. These are all the stocks that have moved more than 15% in the past year per day. So they're also over $1 billion market cap. That over $1 billion market cap is a really important qualifier because you can find tons of stocks that have moved a ton. And the third qualifier that I think maybe hasn't been mentioned here is the liquidity. So if we do look at the liquidity for these, I mean, we can look at exactly what the scan is, but you'll find that the volume for all of them is over probably $100 million. And that basically means you can put in 1/100th of that, $1 million, with the click of a button, and you don't move the stock for the most part. And if that's not you, that's okay. But what it means is that you get the benefit of all these people, there's a spider, who do that, not moving the stock around, which when the stock does get moved around, it makes it super choppy. Say they sell out of it and that makes the stock crash. That can really be rough. Okay, we got spiders, we got phone calls. If you like these ideas, hit that like button. Helps the YouTube algorithm find these videos. If you think they've got some piece of useful info, that could be good. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube post section. And if you want to try out this Discord live stream, which is starting in just a few minutes here from this live recording, head over to stockscommunity.com. You can join that 7-day trial and ask any questions in there. We also do a daily 15-minute drop-in. So give it a shot.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.